My price target for Tesla stock in 2022 is 1600. In this video, I'll talk about why I believe in this price target and the potential risks. Welcome back to Investing with Darren. Click subscribe to stay updated to more videos on Tesla. Let's look at the building blocks for Tesla's $1,600 stock price. The average annual growth for the S&P 500 in the past 30 years is 9%. Assuming Tesla begins 2022 at 1200, that 9% growth would lead to 1300 just being an average stock. This would also factor in inflation as the US government prints money, driving up stock prices in return. The remaining 300 would come from Tesla opening 2 new gigafactories in Texas and Berlin, and higher software revenue from full self-driving and Tesla Insurance, which comes with higher profit margins. In the second half of 2022, Tesla is going to ramp up production of its 4680 battery cells, which will reduce cost of production by up to 50%, and launch the Cybertruck, which would raise average selling prices for its vehicles, as well as expand Tesla's total addressable market to include trucks, which is a huge segment in the US. In addition, I believe that Tesla is going to beat analyst expectations on both revenue and profits. While many are now aware of how rapidly Tesla's production and sales are growing, fewer realize how significantly Tesla's profits are growing as well. In Q3 2021, Tesla generated $1.6 billion in net profits for the quarter. If we very conservatively assume that Tesla would have the same net profits every quarter in 2022, that's $6.4 billion for the year. That will put Tesla in the top 3 of most profitable car companies in the world. This chart on 2020 profits shows Toyota at number 1 at $19 billion in net profits, Volkswagen at number 2 at $15.5 billion in net profits, and finally GM in number 3 at $6.7 billion in net profits. We know that both sales and profits are declining for legacy automakers and will continue doing so for the years to come. At the same time, we know that Tesla's profits will rise sharply, especially in the second half of 2022 as both new gigafactories ramp up production. Now let's talk about the risks that Tesla faces. The most common risk cited when it comes to investing in Tesla stock is the competition and Elon Musk stepping down. I don't yet see credible competition that's going to make a material impact on Tesla's growth in the next 3 years, especially as Tesla continues to iterate and improve faster than the industry. While Elon's a visionary and great engineer, him stepping down is a smaller factor now compared to back in 2018 when Tesla was still in Model 3 production hell and weeks away from bankruptcy. Tesla now has proven scalability with mass market models in the Model 3 and Model Y, 4 global factories, and one of the world's most valuable brands with a very loyal customer base. When Steve Jobs left Apple in August 2021, Apple's share price was $12, split adjusted. 10 years later, under Tim Cook, it is now $179, a 15 times gain. It is set to be the world's first $3 trillion company. Tesla has good operational leaders that can help the company execute well, even if Elon is no longer there. To me, Tesla's biggest risk is China. China controls 80% of the world's battery raw materials and is the world's biggest car market. The Chinese government has demonstrated that it's able to make significant changes to industries overnight. And key risks include controlling the supply of battery raw materials or prioritizing local EV companies over Tesla in the domestic market. This could happen through no fault of Tesla itself, but from pressures arising from Elon's other company, SpaceX. There are credible reasons for the Chinese government to push back on Starlink for national security and domestic policy reasons. Starlink could be used by the US military and could help the US reach the moon and Mars first. The Chinese government would prefer to reach there first, and we see the beginnings of a new space race. Elon has a good relationship with the Chinese government, and Tesla has a growing PR, legal, and marketing team in China. In closing, I'm confident Tesla stock reaching 1600 in 2022. That is a 33% gain, which is half of Tesla's 10-year average annual returns of 68%. I believe the biggest risk to Tesla is not from the industry itself, but from forces beyond its control, which is the Chinese government. If that happens, however low the likelihood, then we've got bigger problems to worry about beyond Tesla's stock price. I'll continue dollar cost averaging to buy Tesla stock every 2 to 3 months in 2022. Nobody can consistently predict short-term prices. If Tesla stock goes down to $800, I'll just be buying more Tesla stock at a discount. If Tesla stock goes up to $2,000, I won't be selling because I've got a longer-term investment horizon. If you found this video useful, please click the like button. Hit subscribe to stay updated to more videos on Tesla. Take care and see you in the next video.